Now, the Indian rupee has shown signs of recovery in early trading on Wednesday as the retiring head of the central bank hands over to his successor. Now, the currency had lost a quarter of its value against the dollar this year. The new director, Raghuram Rajan, will also have to deal with a record current account deficit. The currency has plunged almost 20% since May. This is primarily because India is importing more than it's exporting, leading to a $90 billion current account deficit. India has currency reserves of around $278 billion. This could help pay for some of those imports. But the big concern is with the U.S. Federal Reserve contemplating slowing the pace of so-called quantitative easing. India may need international help. Well, for more on this, joining me to discuss this is our business editor, Abid Ali. Let's start with the new man who's taking over. India's faced a lot of problems, and it's come up in recent months exactly how deep these problems go. Is he the man that can solve these problems? Can he address them?
Well, you know, he certainly has rock star status within India itself, and he's much liked overseas, much respected, simply because his time at the IMF in 2005, he predicted the US financial crisis. He warned that this would happen, and it sure played out the way he said it would happen. And so for this particular reason, you know, everyone expects him now to move into this new role and fix India's problems. But the problems are deeper than that, and he knows that today he might be the hero, tomorrow he could be zero, because he's seen what's happened to past central bank governors, notably if you look in the United States. So you look at Alan Greenspan, the former governor, when he was in office, everybody's going, he's doing a great job, he's really helped the economy, but afterwards everybody realized he ran one of the biggest bubbles that the US had ever seen.
One of the biggest issues is that elections are coming up and everyone's looking for a quick fix. But you named it, the bubble. I mean, for so long, India has been growing and it's been the darling of investors. What happened?
So, at the start of this, in early 2000, you know, India, Russia, Brazil and China were growing at a great clip, and everybody's wanting to get a part of that. So money was moving into those economies. But when the financial crisis happened, there was a flood of money pouring into these economies because everybody wanted to get some of that growth. And that money went into the economy. It went into some useful places, but it also went into areas where it wasn't productive, like property sector, like the stock market. And that's really unhooked the whole of the economy, because when that money came in, banks were loaning that money out, and now they need to find that money back. And so basically this is the reason why we have this bubble situation in India. Also at the same time, people are feeling richer and they're going, we want more washing machines, we want more cars. And so if all these things are coming in from overseas, someone's going to have to pay for it. And the way the government's been paying for it so far is by running a budget deficit and a current account deficit. So basically the current account deficit, as we just mentioned, is about $90 billion, and the budget deficit runs at about 6.7%. That's a really uncomfortable amount, and the way they've been paying for that is by getting the central bank to write them a blank check.